Conversations. Then Mass Financial is the management that's joining us on the show. Mr. Kamlesh Gandhi, who is the chairman and managing director of the company, is joining us. Mr. Gandhi, good afternoon. Thank you for joining in. I'd like to start off with your disbursals. They were very strong this quarter. Do you see this trend persisting into the fourth quarter and going into FY26 as well? If you could give us a growth target that you have.
If you say that we could register an 18% growth on business land and around 20% growth in our AUM. Usually, we always have a strategic intent to grow our book AUM anywhere between 20 to 25%. And in times like this, it was on the lower end of the spectrum at around 20-21%, while maintaining the profitability at around 25%. And very importantly, maintaining the quality of assets at around 1.6% of as net NPA of our area. And going ahead, we are confident that we'll be in a position to maintain a growth trajectory anywhere between 20 to 25%. But having said that, we always believe in discovering growth rather than just determining growth. We will see the market situation from time to time and then plan our strategies accordingly. But as I say right now, we say no reason why we should not be in a position to register anywhere between 20 to 25%.
Mr. Gandhi, thank you so much for that. Also need a couple of numbers from you. In terms of the net interest margin, sequentially, we understand there's been a bit of a dip. So do you see that recovering in Q4? Also, post-rate cut, how do margins trend? And along with that, could you give us some guidance as far as asset quality and credit costs are concerned?
In terms of NIM, historically, we have been in a position to maintain anywhere between 6.8 to 7.1% of NIM this year. This one also is close to around 7% of the interest margin is concerned. The credit cost hovers at around 1%, anywhere between 0.95% to 1.10, 1.15%. That we hope to continue at the same level. And having said that, this will leave us with an ROAs of anywhere between 2.8 to 3%. And we are confident that they should continue. On the question of reduction in interest rate, when it really percolates down and when the transmission happens, it definitely benefit us. But it takes time because majority of our borrowing is MCLR win. So whenever there is an MCLR reset, we will get the advantage of this.
Mr. Gandhi, what about the MFI space? Where this has been one sector that has been under a lot of stress in recent times. How much is MFI as part of your overall book, the microfinance space, and how much for how much longer do you expect this pain to continue? What are you witnessing on ground currently?
We have been very circumspect dealing with MFI since more than 1.5 years, given the operational realities. So currently, as I talk to you, our exposure on MFI is less than 5%. And that too is behaving very nicely. We have been very selective on the NBFCs whom we have worked with or whom we have met. And coming at the ground level in reality, I think MFIs are loans anywhere between 18 to 24 months. So we have seen the pains last 2 or 3 quarters. And I think that things should stabilize given the new operational practice on the ground level of extending where the credit is due, extending credit where it is due, and aggressive collections. Given that reality, I think within the next 2 quarters, we will see stability, and then we can think about distant growth.
Mr. Gandhi, one last question. You had given us a couple of guidances last time around, 20 to 25% growth guidance. Will you meet that in FY25? You had given us a GNPA guidance in the range of 2.25 to 2.5. Do you continue to maintain that? Fresh FY26 targets, if you've unveiled them, could you help us with that particular number as well?
We are already 9 months through this year and we have registered a 21% growth, and we are confident that we will be anywhere between 20 to 22% growth for FY25. For FY26, difficult to give the exact numbers, but the trajectory will be between 20 to 25%. And as I shared earlier, depends upon the situation that unfolds from time to time. Because as a lending institute, we have an horizontal presence across sectors and geographies. So we have to take this decision from time to time depending upon the quality of the portfolio. But as I see right now, 25-26 will also see a decent growth of anywhere between 20 to 25%.
Last time around, you had also told us that direct distribution growth for you will grow at a much faster pace compared to indirect distribution. So how's the on-ground distribution? How's the on-ground disbursement? And are you facing any issues in terms of collection?
We are expanding our distribution to our geographies. Right now, we work in 9 states. We have 200 branches. We are adding the branches regularly. Currently, we have more than 40,000 pin codes being served, which was around 12,000 a quarter ago. So we are continuously endeavoring to increase our direct distribution to our direct reach, whereas our distribution through NBFC is also going solid, and it has yielded very favorable results for the company in the last 15 years. That was a model we introduced in 2011.
Right.
That is working nicely. So the direct distribution will grow at a faster pace as that continues, and with our expansion of branches and more customers.
Right. All right, Mr. Gandhi, thank you so much for sparing time joining us today. Wish you good luck for the road ahead as well, the management of Mass Financial. But the stock